Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today again, we're going to be covering some financial results, and today we're speaking about one of the larger conglomerates on the conglomerate sector, AMCL Limited, as well as its subsidiary, AMCL Merchant Bank Limited. Now, both groups would have reported improvements in their earnings overall. Let's take a look at how they would have done and what investors might expect in the coming months ahead. Turning firstly to AMCL, for its half-year period ended June 2023, the group would have reported a diluted earnings per share figure of $1.13, which was a whopping 600% increase from the 16 cents per share recorded in the prior comparable period of half-year 2022. Now, take that with a pinch of salt, rather. That would have been obfuscated to some degree by movements of non-cash mark-to-market gains across investment portfolios, and that will be a particularly constant theme in today's presentation. Now, revenues overall increased just about 3.3% from 3.1 billion to just around 3.25 billion. Overall operating profits increased 265% from 97.8 million to just around 357 odd million, with profits for the period increasing that 571 odd percent from 32.9 to just about 221 million for that 6-month period. So certainly improvements in terms of reported earnings overall for the group. When we take a look at profit before tax by segment, we can see some notable changes. One of the major changes in that pink segment, of course, the construction manufacturing, packaging and brewing segment would have declined some 23 odd percent from 209 million to just about 160 million in the most recently concluded financial period. Overall, the automotive trading and distribution segment would have increased some 17 odd percent in that green segment from 76 million to 89 million. And banking and insurance, having a much better year in terms of financial markets, would have swung from a loss of 119 million to a profit of just about 86 million for the most recently concluded period. Media, services, retail, and parent company in that orange segment, of course, posting a smaller loss than the comparable period, 24 million versus that 73 odd million in the prior comparable period of HY 2022, or the 6-month period of the first half of 2022, rather. Now, when we take a look at valuation basis of AMCL, we can see with respect to its half-year earnings per share, that would have recovered nicely in that green segment. In fact, it is the highest level it has been in the past 4 odd comparable periods. On a trailing 12-month basis, that trailing 12-month earnings per share has declined to just about $2.12, again, capturing the second half of a very tumultuous 2022 in that trailing 12-month period, which would have been affected severely by adverse movements in financial markets. So we do expect some recovery in earnings per share as we move later and later on in the year and capture more favorable quarters of financial performance across financial markets. From a valuation perspective, though, on a reported earnings basis, investors are paying more per dollar of earnings generated right now for AMCL shares at 25.5 times in terms of a price to earnings ratio, the highest level in compared to recent comparable periods. In 2020, for example, that ratio was just around 17.9 times. But that ratio is expected to moderate again as earnings recover nicely as we head into the final half of 2023. So at a price of $54, AMCL or AMCL is trading at that price earnings ratio of 25.5 times, above that sector average of 15.6 times, remaining relatively stable in terms of its dividend yield, especially when compared to the sector, 3.3% versus the sector average of 3.2%. So with that modest revenue growth in mind, continued acquisition activity, some acquisitions including Qualifier, as well as the Bahamian Brewing Company, or minority stake rather, but keeping those elevated valuations in mind, Bourse is maintaining a market weight rating on AMCL for the time being. Turning very quickly to AMCL Merchant Bank Limited, or AMBL, a subsidiary of AMCL, the group would have recorded an earnings per share figure of 75 cents per share for its 6-month period ended 2023, which was a nice return to profitability from a loss recorded in the prior comparable period of $1.50 per share in that first 6-month period of 2022. Again, take that with a bit of a pinch of salt again, rather, given that much of these earnings reports would have been affected significantly by non-cash mark-to-market movements of the investment portfolio, which would have filtered into the income statement of AMBL as well as ultimately AMCL. Overall total income would have increased 73.2% from 285 to 494 million, and that profit attributable to shareholders swung from that loss of just about $129 million to $64.5 million, a 150% increase, if you like. When we take a look at segment performance, we can see that banking services in that reddish segment would have increased from 22.3 million to 81.1 odd million, roughly a 260% increase. To that insurance services, which would have been significantly impacted again by those non-cash mark-to-market movements, swinging from a loss of 151 million in that green segment, a profit of PBT of 40 odd million, and the mutual fund segment also impacted by mark-to-market movements, swinging from a loss of 18.7 million in HY 2022 to a modest gain or modest profit before tax of 1.6 million in half year 2023. A similar story in terms of the price to earnings trend for AMBL as AMCL. We can see that currently the trailing price to earnings ratio is around 29 times, coming back down from a high of 71.4 times, given the severe impact of non-cash mark-to-market movements on its overall reported earnings in the half year of 2022. Still some way off where the half year trailing 12-month earnings per share would have been in prior comparable periods. But again, as favorable markets persist and we move into more profitable quarters on a trailing basis, that trailing earnings per share is expected to improve in subsequent periods. So at a price of $44.50, AMBL again is trading at that price to earnings ratio of around 29 times compared to the sector average of 11.2 times, offering investors a dividend yield of 2.7%, which doesn't look very appealing compared to the sector average of 6.9%. But bear in mind that sector average of 6.9% would have been significantly impacted positively by the very robust dividend performance of NEL in recent financial periods. So with that increasing revenue growth in mind, again, continued acquisition activity, but also those elevated valuations, Bourse is going to maintain a market weight rating on AMBL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website where all of our research is absolutely free at bourseinvestment.com. Stay safe, have a great investing week, and we'll see you next time on the Bourse Report.